What is up? What is up, everybody? It's Big Cheds. Coming to you today is September 10th, 2022. This is a replay of the Twitter Spaces conversation from September 7th, or rather September 6th. I'm going to go ahead and play this, and I'll be hanging out in the chat room, and I'll talk to you guys at the end. So here we go. Everybody, just hang out here for a minute. I'm going to get this thing started. If you're listening on the replay, thank you. What's up, everybody? We're going to get this conversation going here in just a minute. I, of course, am Big Cheds. I want to say thank you for joining the conversation. We're just going to be hanging out here and talking for a while. I want to talk about the crypto market, Bitcoin, kind of hear from you folks about what's going on, how you're doing, maybe answer some questions, all that good stuff. This will be uploaded to YouTube later. I am on YouTube at Ched's Trading. There's some great playlists for you. Check out the masterclass webinars, teach you how to trade. These Twitter Spaces conversations will go right into the Twitter Spaces folder. The free version of my book, Trading Wisdom, you can find that there as well. But just so you know, this is a recorded space, and I save them for later, for the future, for students who are really serious about learning. You may be one of them listening to this right now on replay. I think that's fantastic. So what's going to happen is, folks, there's a button in the bottom left. It says, I think it says request mic or request to speak. It's right there in the bottom left, that little microphone button. I want you to hit that button. Right? I want to bring you up and I want to hear what you have to say. Don't be shy. Ask me your question. You know, if you want, maybe I can take a look at your favorite altcoin or whatever's going on. I'll be brutally honest. But, you know, it's you folks that make this conversation interesting. I've got 100 and 200 people now, and only one person is requesting to speak. And it's someone who I've seen before. BMO, good to see you. But, folks, you got to step up. I'm not going to even think about getting this conversation started unless I have more of you who want to speak and who want to ask questions. So that's why we're here. I'm not just here, you know, to hear myself speak. I really want you folks to step it up. I'm going to send out a tweet right now. Let's see. Cops invite, share via tweet. Join BTC. So listen, you folks you really need to step up. I don't know what, there's only 2 people requesting to speak. There's 223 people. The rest of you are just hanging out, sipping on a glass of wine after a hard day's work, having me on in the background. But I want to hear from you. This is what it's all about. I want to hear from you folks out there. All right. So when I bring you up, please be patient. Please wait until I call you and we'll get this conversation going. It might just be a short conversation today because there's only a few of you who have requested to speak. So just kind of hang out, wait till I call you. First up will be BMO for sure because you were here first. BMO, bless. What's going on? And folks, let me handle your muting. BMO, what's going on? BMO, bless.
What's up, Chats? Can you hear me?
Yeah, what's going on today?
What's the word, brother?
You know.
Quick question. Okay, so I know you've said in the past that we can use these spaces to gauge sentiment. What's the best way of doing that? Is it listening to people and seeing how many people ask, "Oh, is the price going lower?" versus how many people are asking, "Is the price going higher?" Like, what's a good way to gauge sentiment from these spaces?
So there's varying degrees of how useful it is. I mean, because it's most useful at sentiment peaks. It sometimes it's obvious and sometimes it's not. Right? It was really obvious five of these spaces ago. I did 5 spaces ago was with Nakamoto Lisk. It was right at like enthusiasm peak on Ethereum, and you could hear from people saying, "I can't wait anymore. I have to go. I have to jump in. You know, we're already at 2,000. I don't want to miss the ride to 3,000." There was one after another asking about Ethereum. I can't wait anymore. I'm going to get in. Right. So that was a peak. We just started this. You're the first guest, and thank you. If everybody else comes up and says like, "I'm out," Bitcoin, crypto's dead, I'm out, it's over. If like 80% of people are saying that, like that would also be something. So it's the extremes which stand out the most. When it's kind of a mixed message, it's a mixed message. So that's how I handle it for sentiment. I also I monitor things on Twitter. I mean, I have a pretty clean following in terms of the people I follow, and I just pay attention a little bit to the replies. And I just have like a feel about it. So I don't use a fear and greed index. I think that's nonsense. I don't use any of that stuff. So you've got to kind of find a way that works for you. But really, I guess to answer your question is for the spaces, when it's really extreme, I think that's when it's of the most value.
Okay. All right. Cool. Thank you, brother.
Hey, thank you, man. I hope you have a great night.
All right. You too.
All right. Let's see. Nishant.
Hey Chad.
It's your
Hey
turn.
Chad, how are you?
Hey, what's up?
So a quick thing. I mean, I've been just thinking about like the way BTC been behaving. Obviously, it's one of the weakest charts
Yeah.
you'll ever see. Like after like a stocks rally, BTC didn't even rally. I mean,
Yeah.
you cannot even call that a rally, right?
Relatively.
So
It had a good rally, but it wasn't as strong.
yeah,
It wasn't as strong.
yeah.
Relatively,
I mean,
yes. Yeah.
yeah, it was like it just went up. I mean, it was one of the weakest, seemed like. But I mean, look at like if we look at the history with GBTC going into like huge discount,
Yeah.
seems like interest in BTC is almost not there. Like whoever like is like
Well,
that, everybody is dumping BTC.
you got to be
Do you?
careful. You got to be careful looking at GBTC because over time, initially it was one of the only ways to get exposure to Bitcoin for like legacy markets, and now that's not the case.
Yeah, but what I'm saying is like it's running at a discount for a while now, and the discount
Mm-hmm.
is being widening. So that shows that there is no interest in BTC for a while. And even
That
if you
shows
see the
there's no
20,
interest in GBTC.
yes, and also I would say like even if you like take any of the stock like BTC, I wouldn't say that it ever made a blow off top. Like even the 2021 rally was not a blow off top. Like
Okay, those
Ethereum
are
had a
words. Those are narratives. What does that mean?
no, no, but
You know?
what I was saying was,
Yeah.
I mean, like Ethereum had a clear blow off top twice. So like it blew off like in April and in November, it showed up, hey, this is the final run.
So
BTC
did
never
Bitcoin.
had. Yeah,
Bitcoin did the same thing.
yeah, but I mean, I would say the percentage gains, like if you compare it with any of the past runs, they were nothing. So to me, it
Yeah.
seems like
Well, that's
the
because it's
interest
getting
in
higher. That's because it's getting higher. We're having diminishing returns because the price is
well,
getting higher.
probably, yeah, but I mean, it seems like interest in BTC and new technology probably is. I mean, obviously, crypto is here to survive, but
Mm-hmm.
doesn't seem like it's going to be BTC. I mean, I know it was the first player, but I mean, to me, all the signs points to that. Hey, something else will come up. That's what happens every time a new leader comes up. We
Okay.
all thought BTC would be the one. Obviously, crypto. I'm not saying crypto is going away, but it may not be BTC, and that's what the initial like
What
always
may
the.
not be? What does this mean? I don't. I'm not.
I mean, what I'm
I
saying
don't
is
even know
like
what conversation we're having. What do you mean?
no, so I'm just saying that I mean, seems like in the longer run, BTC is not going to make it. Like probably it just runs around this level for
Well,
like
I'll tell you what.
probably
Let's check back in a month, and then we'll do it another month. Let's just keep checking
yeah,
up on it. Let's. Hey, let's. I'm going to move on. It's a great topic. Listen, but let's.
sure,
You got to focus on now. You're getting way too ahead of yourself by trying to start focusing and predicting in the future. It's not going to make it. It's not around. Like that's just focus on what it's doing right here, and kind of stay closer to the trend. All right.
okay, sounds good.
Thank you, brother.
Thanks.
I appreciate you. Thank you for stepping up. TJ, what's up, man? It's good to hear from you. What would you like to say, TJ?
Sorry. Yeah. I was just saying that basically I've been out of the market since end of July after its second push up above 24k because I thought that was going to be it, and then it did do another rally to 25, but I've kind of just stayed out of that. I was like, you know what, I'm not sure if it stays up there, so I've just kind of just stayed sidelined for over a month now.
Good for you.
Maybe done like a couple CRV trades, but that's about it. But so I've been waiting for this level here for over a month now.
Yeah.
And I'm trying to find, instead of trying to catch a falling knife at this level, I'm trying to think of what's sort of the best way. I'm thinking maybe a sweep of the sort of 18.6k lows, and then reclaim sort of a spring there. But our main question really is, have you got an interest at this level? And if so,
Right
what
here,
are you
right here,
looking
no.
to see?
No, not right here, but I think I'm interested if we like break 17.5 very quickly and then come back, if we go to like, 17.2 or 16.9, then come back up above 17.5, that would be a spring, I would be interested there.
Okay.
Other than that, I'm waiting for like 14K and lower. So I'm willing to say that it could bottom here, but it would have to do some type of a double bottom, I think, with a lower low on the second thrust. They put out a tweet about that, and I've been talking about it in spaces now for a couple months, I guess, or for at least a few weeks.
Yeah.
So yeah, I mean, we'll be on watch to see that happen. I think there's still a lot of bear momentum here. I mean, I still think we probably do push lower in the short term, and it was a big deal. We've been waiting for this level though since really August 19th when we broke down and couldn't hold 22.5, when we couldn't hold that higher low. That's when you essentially immediately started looking to like 18.5. We kind of basically did that. So it's been trading and then just rejecting off the EMA 8. Like it's been pretty systematic. It's been pretty straightforward trading. But I still, for me to like jump in for a long here, I need way more volatility and a bigger price drop. And I need to see it puncture the lower Bollinger Band. And we haven't quite done that yet.
Yeah, where's that at now?
It's good. It's right.
Oh,
It's right at like
we've only tagged it at the moment. Haven't
I mean, if we drop to like 18K, and then bounce, maybe I do a small trade there from 18 back up to like 19.5, because now 19.5 is a resistance level. So any bounce is probably going to reject, like 19.5 on the underside of the descending triangle that just broke down.
Yeah, because I was thinking that if we did do a sweep of the 18.6, I'd look probably up towards 21.5.
Sure.
But ideally, like you said, because I mean, double bottoms with a spring are always beautiful to trade. So I'd love
100%. 100% agree. I'd love to see that. That'd be a nice way to do it. But
yeah,
I don't know.
Yeah. I mean, lower. I'm mainly trading, but I am at the moment sort of doing a slow, just every month, and anytime we're under 20, just doing a slow DCA in a small investment one as well. But I am mainly trading.
Well, I hope you do well, bro.
Yeah. But anyway, yeah. Cheers for having me on, and yeah. I'll keep
Thanks,
listening.
man. Hope you do well. Thank you so much.
Cheers, brother.
Take care, buddy. All right, folks, let's get you in here. We're going to power through these. Next, we have F the banks. F banks. What's going on? F banks.
Yo, man, it's all good. I just came here to say fuck to that Nishan guy who says BTC is not gonna make it all. So yeah.
Okay. All right. Thanks for sharing, buddy.
Yeah, man. Cheers.
All right. Next up, we have Crypto Investor. It's your turn. Thank you for being patient, Crypto Investor. What would you like to say?
Hey, Cheds, how's it going, buddy?
I'm hanging out there, man. I thought I would just talk to you folks for a little bit,
I appreciate it, man. This is first time speak for me with you. Just want to say thank you for everything that you've been doing, man. I've been following you for about a year now. And when I look for trading advice or strategies, you're one of the first people I kind of, check in with. So
you're kind. Thank you very much.
That being said, I don't have anything in front of me. I'm actually sitting in my truck right now. I saw your notification and you're doing spaces, so I wanted to jump in. But I had a quick question about divergences.
Yeah.
When using oscillators, I don't put a whole lot of weight in oscillators individually, but I try to use pull something from each. But when you're talking divergence, what do you typically pair your price action up with, or find as more reliable, such as your on balance volume, or do you look at relative strength?
Yeah, I don't use RSI for divergence anymore. I found that it just gets you in trouble because it's bound. It's got that fixed limit. It's bounded.
Okay.
If you wait, if you're going to try to use RSI, you have to wait for it to you have like a double divergence or a triple divergence.
Okay.
Really, on balance volume is really reliable because it should confirm the trend. If the price makes a higher high, on the daily chart, the on balance volume should also make a higher high.
Okay.
So, but I don't like go around looking for divergence. I only look for divergence when the price is at a key level.
Okay.
And it's like that extra piece of information. So it's never really going to be like the reason for a trade, but it can confirm a trade idea that I have based on like price relationship to, you know, support and resistance and momentum and all that.
Sure. Okay, well that makes sense. I've been trying to use more, you know, looking at the OBV here lately instead of, you know, even the MACD. The MACD kind of gives me an indication on where things may go also. But
Yeah, a lot of people use that. It's a little slow for me. I don't
Yeah.
like it. But there's so many different ways. You got to figure out what works for you. Simpler is better, and OBV works really well. So
And one other thing on the divergence,
yeah,
is there a real difference between regular divergence and hidden divergence? Does
it's a big
one hold more value over the other?
Well, you don't. If you're going to use RSI, I would use it for hidden divergence, which is
Okay.
continuation divergence. I wouldn't use it for regular or reversal. And
Okay.
you don't want to use OBV for hidden divergence. Like there's no scenario where it's better to have like a lower high in the OBV
Okay.
or a lower low rather.
All right.
So just use, if you're going to use, you know, for regular divergence, which is reversal divergence, use the on balance volume. It's
Okay.
just tallying up the buy and sell volume. But just honestly, it's, you know, you just shouldn't even really mess with that stuff. I would just try to
Right.
get really good at identifying support and resistance and kind of figuring out where the price should bounce and should reject, and then kind of track it and see how you're doing.
Okay.
Because the price just leaves clues. It gives us so many clues in the chart, just in the price. Like we don't have to look too far, like outside of that, you know?
I agree 100% with you. And that's typically kind of how I trade. I'm not a big daily trader, so to speak, but I try to go more, you know, support resistance levels and go day by day instead of
Good.
Wyckoff. I know there's,
Yeah.
you know, that has significance, but I really just don't go that way. But anyways,
Yeah.
I don't want to hold you up, man. I want to let somebody else jump in. Thanks for your time, bud.
Keep doing what you do. Take care.
Thanks, man.
All right, next up, guys. By the way, I'm just as a quick reset. I'm Big Chats on Twitter, author of Trading Wisdom. It's on Amazon, but you can get it for free on my YouTube. The link to my YouTube is at the top of the spaces. Chad's Trading. Let's see. Default Trades. It is your turn. Default Trades.
Hey, what's up, Cheds?
Hi.
Yeah, I haven't been following you that long, but I did come across you, and whenever I can find some good alpha, I like to take advantage of it. But I saw you had a space that I'd hop in and
cool.
Get your perspective. You know, I've been trading crypto for the better part of like a decade, and I started trading equities, and I have found it wildly advantageous. Trading like the S&P and how heavily correlated they are, and especially having to do with a lot of like macro things that affect the sentiment. Do you ever use stuff like that in terms of
yes and no? I mean, yes,
indicators?
Yes, I definitely. Well, yes, but it's a little bit of like you still have to just make your decision about the chart in front of you, right? Whether the price is holding support or not, you know, whether the price, you know, breaks resistance or not. Like if there's a really good setup and you know, it's a bullish chart that just dropped like 30% back to like a major weekly support, and it's a level you would have wanted to buy, you know, like 3 months ago, but now you're afraid to because of what the SPY is doing. Like you can't do that. Like you have to trade each chart based on what that chart is doing. So it's you know, it's good to be aware of what other things are doing. But for example, right now BTC is relative weakness to the spider. Like the SPY bounced and tagged the daily MA 200, and like Bitcoin couldn't do that. Right. So I mean, they're not one-to-one, whether there's 60, 70, 80% correlation between these different markets. It's not 100%. And you have to trade, really just be disciplined and only trade within the four corners, right, of the chart in front of you. So it's the danger of talking yourself out of a good trade and having too much input, too many data inputs into the equation, right?
Yeah, like first and foremost, like you said, like price action is the king, you know, like supply and demand, support resistance, key levels. But I like to use a lot of these things as like confluence. So like copper is a big leading indicator for the general health of the market. The dollar index is usually inversely correlated. You know, like the VIX, you know, watching bonds and you know,
if all those things, if you use all those things to get you to look closer on the chart is fine, right? But don't ever let them to like talk you out or talk you in, right? Those are good things to say. Okay, now it's time to pay attention to whatever like asset I'm ready to trade. You know what I mean? So I
And
think
you said something
you'll
like
do fine.
important earlier, that's like a lot of, beginning retailers don't really understand like how valuable it is. It's like general sentiment can be incredibly valuable when, like you're saying, when everybody doesn't want to buy, it's like usually not, blindly, but like it usually might be a good time to look towards going long, or for me, if I get like a little tingle, then I'm like, oh man, it's dumping really hard. I might want to be careful, but we're in a demand zone. I'm probably going to throw on a trade and put a pretty tight stop loss on the other side of this demand zone, and my risk reward is probably going to be pretty good.
I like what I'm hearing from you. It sounds like you're right on track. It's a good rule of thumb to buy when other people are complaining about the price, right? So that's a good one right there. I appreciate you stepping up, man. Sounds like you're right on track.
Hey, man, appreciate the alpha, man. Keep it up.
Hey, thank you so much. Appreciate you. All right. Who do we have next? I think Swimfish, you're up next. Swimfish, what's going on?
Big shirts, big thanks, and big salute to you, bro. I'm a long time listener, but first time speaking.
Thank you.
Love your work, man. The amount of effort you put in there, the amount of time you put in there without expecting anything from anyone. The sentence what I liked from you, this which you said sometime back. I've been listening to you since very long time now. Is I have a small brain and I like to look at small things, just the horizontal lines, which is support and resistance.
Oh, so
I
good.
never traded. Sorry. I never traded, bro. I never traded with margin. I'm always a spot buyer and seller. That's it. I mean, yeah, I made pretty good just by listening to you. I came over here to say something, an open secret. A lot of people out here who are currently in this particular space, they have their own channels. They listen to you. They go out and try and shill something which they understand nothing. They make a lot of money, bro. Hey, hats off, hats off. Good luck, bro, and keep sharing alpha.
All right. I'm so happy to have you following me. I'm glad you're doing well, and I appreciate you stepping up and joining the conversation. All right. Thank you so much, my friend. Next up, we have. I just removed the wrong person, I think. Was that you, Swimfish, that just spoke? I just removed the wrong person. I think it was.
That's right. It was me, bro.
Yeah, I'll try to get the other guy back. Nafwal, I'm sorry, my friend. That was my fault. If I see you, I'll bring you up. All right. Thank you, Swimfish. Thank you for stepping up. Let me just see if that guy's still here. Nafwal. Anyway, sorry, man. If you're hearing me and I didn't mean to do that. Oh, there you are. Let's get you back up. David, I'll get you next. Nawaf. Sorry about that. What's going on?
Yeah, hey, it's my bad.
No, it's my bad. I removed you.
Yeah, Sheds, I just have one question. We're having the merge event for Ethereum coming soon. So could you just please give us what's your views on that and how it will be affecting the market?
It doesn't matter to talk about it now. I mean, we just have to watch Ethereum. First of all, the buy the rumor part is over. Like that already happened. So we already had the big run up. Okay, so now we're just kind of bracing for impact. The chart's kind of broken down. It either breaks the daily MA50 where it was rejected recently, or it drops. We're rejected for like the fourth time in the last week. If you see my tweets, I've been tracking it. Or it drops back to like 1270, 1280, and everyone's going to buy it. So nobody knows about the merge, like if it's going to go well, what that's going to mean for the new proof of pizza, whatever they call it. It doesn't matter, man. Like as long as the market is actively traded, the price is going to trend, and it will either hold support, it'll break resistance. Even the best fundamental analysts still won't be able to answer your question about like what's going to happen. So just kind of watch the chart, study the chart, let the price filter it all through for you. It's got to get back up above MA50 daily. It's got 2000. That's a big resistance level, and it's got big time support around 1300 basically. And so I would just watch it that way.
Yeah, great, man. Thank you so much, and keep sharing the beneficial content for us, please.
I'm just having fun. I'm glad you're here.
Thank you, man.
All right, I got a friend who wants to come up, Big Jonas. We'll get him in the conversation. Let's see here. David, Mr. Mendel, what's going on?
Yo, what's up, everyone? Hey, Big Chads. Recently joined Bitcoin Live a few weeks ago, and
welcome.
You finally convinced me after all this time. But
What was it? What was it? What was it?
I don't know. You always talk about it, and I watched one of your old videos. I think that you posted on Twitter, and just your analysis here. I'm like, you know what? I finally, want to join it. I don't know, but I appreciate the quick response. I think that's one of the most underrated aspects. Is everyone gets to post under your videos, and you respond pretty quickly. So
I'm kind of a degen, man. Those are my people though. Bitcoin Live members, like I take that oath really seriously. I try to put it all in there.
So I really appreciate that. I have two questions for you.
Okay.
On moving averages, if you're trading, let's say the 4 hour, do you want to know where the 200 is on like the daily or the 1 hour or like the MA 100 on a different time frame, for instance?
So say it again, please.
So if you're trading, let's say the 4 hour chart and the price is, I don't know, maybe getting up to the 200 and you have like a target or let's say you're right against it. Do you want to know kind of where the 200 is on the daily chart or the weekly chart?
Absolutely. All of the above. Yeah. Oh, definitely. So, when I'm on the 4 hour chart, I'm trading knowing what the daily and weekly are doing. Absolutely. There's 100%. And I'm still making a 4 hour trade where we're maybe trying to ride the lower to the upper Bollinger Band or maybe like, the measured move of a triangle or some pattern that just broke, or maybe just the next, resistance above or maybe support below. But I always know what the larger time frame is doing, because otherwise you're flying blind. Like, you got to know what the larger trend is doing. So you have to go outside in. You have to, if you look at all the videos on Bitcoin Live, and definitely now that you remember, like, go back and watch my old updates. Like, everyone's a lesson. They're gonna you're gonna like it a lot, and you'll see like most of the time it kind of lines up, but there are times where there's some mixed messages. Like, this recent top we just had at 25K. If you go watch the video I did right before it broke down, it was like, well, the weekly chart, we finally have closed above this level and it's looking like, bulls are in charge. But there's some major warning signs on the daily charts. You go a little bit closer and, there were some really big warning signs that we talked about back then. But most of the time it will line up. So you're trading within a larger trend, and there's room to move on your 4 hour chart within kind of wherever the daily and the weekly are. So you have to know what's going on the other time frames, definitely.
Would you look even at a smaller time frame, or you wouldn't consider yourself, let's say, the 1 hour chart?
I would, if it's at a key level. There's the rule of thumb with time frames, and we have Big Jonas here who may have some thoughts in this topic. When after volatility is when you drop to a lower time frame. So after the like, if you go back and watch my Bitcoin Live update right around January 24th bottom, I talked about like all these trades I made on the 1 hour chart, like right at that time. Right. Right after volatility, you can go to low time frame, and when the price is at a key level is when you go to lower time frame. But the rest of the time, you should be on like a daily, maybe a 4 hour, to kind of see what the price is doing. But when it's at like a very key point, maybe you can go to the 1 hour and kind of go there. Jonas, what are your thoughts on this subject?
Hey, Chaz, long time, first time. Listen, there's no right or wrong answer on this. There are people that don't even use moving averages. It's not a bad thing. There are people that potentially overuse them, have too many, on there. The key is to be consistent. There is a reason to be aware of where the MA 50, 100, and 200 is on the daily, the weekly, and the monthly, in my opinion. The guy mentioned the 200 on the 4 hour. That's a very important trade. I like to take sometimes, especially if you're coming back up to it. The first touch is normally rejected. Thusly, if you're coming down to it after being above it for a while, the first touch is often an area of support for at least a bounce trade. So there are reasons why, the price action and these candles bounce and form up at certain levels if you add these certain indicators and you think about all the people who are watching those indicators. And that's another thing you got to keep in mind about is, the heavy trade, the crowded trade, people that are too much involved in the same exact indicator. And a lot of times the market can use that to go against that kind of that kind of thought process. But yeah, it's important to keep that in mind, but don't allow it to kind of cloud your judgment. We use these moving averages, or you can not just to support and resistance, but to actually define if you're in a bullish or a bearish trend.
What about the time frames, though? It was also interesting, kind of your thoughts on when to use what time frames. I know you've talked about a 15-minute trade on the 15-minute chart.
Yeah, well, no, kind of like there's no, you can use them on any time frame. Just make your decision about how you're going to execute that trade based on that time frame of data. So if I'm looking to swing something, and I would say, all right, we've regained support of the MA 50 or something, and that means that I will basically set my stop to that failure of that regain. Or there's another thing which we call the fan out, which if you have these multiple moving averages or EMAs and you're on a lower time frame and the price action starts to get bullish or bearish, they start to fan out and basically spread out, and you can basically use the extremes of their separation, almost like spaghetti bands, to determine if we're in an overbought or oversold situation. And those, for me at least, have been very crucial in determining a bias in the market, and to really set the parameters of a trade.
That's right. All right, that's about Big Jonas on Twitter. What's up, Dave? You got anything else before we roll on?
How come you even asked Big Jonas to be an analyst yet on Bitcoin Live?
He actually is. He used to do videos for us back in the day.
Yeah.
But he's moving on doing his other things. But he's he's definitely in the team. He's part of the family.
That's great. Thanks, guys.
Thanks, man. Great to hear from you. All right, that's Big Jonas, folks. He's on Twitter at Big Jonas. He doesn't tweet a lot, but when he does, we pay attention. We have Adham. It's your turn. Adham, what would you like to say? Adham, Thug Panda.
Hi, Chads. Hi, how you doing, Chads? You all right?
Doing really good. Hold on, let me just mute someone real quick. And then hang on. Hang on there, folks. Please hold on. Let me just handle the muting. All right, go ahead, Adham. What's going on? Sorry about that.
Can you hear me?
Yeah, what's going on?
Yeah, it's all good, Big Chads. How are you doing? You all right?
I'm doing good. How are you doing tonight?
Doing all right. Was just listening to your conversation and in the cab at the moment, actually, in London. I had two questions, Chads. The first one was the question in regards with the divergence starting to play out. Price would need to revisit 18K area to resolve completely.
Yeah.
I just wanted to learn a bit more, and how did you come up with the to revisit 18K to resolve completely? That's the first question.
It was just the slope. I'll answer that one real quick first quickly. It's just that the price slope would match the slope of the OBV, where it would just have the same trend. Ideally, you want the trend of the OBV matching the trend of the price. When I put it that tweet, the price was trending higher and the OBV was trending down, right?
Yeah.
Divergence. So essentially, I'd have to look at it again, but it's probably somewhere in that area that the divergence will resolve.
Right. Okay. Makes sense. I'm gonna have to look into that as well. And the second question, you also tweeted that if you are with me on the 25K short, it means you've been short since 25K.
Yeah, I'm short. I'm short since 25K. Yeah.
Wow, that's amazing.
It's not that amazing. We had two outside bars with up thrusts, which are classics. Yeah, and I talk about the simple. Like either go long on a spring or short on an up thrust. But it made it hard to go short because you got stopped out of that twice. The Gravestone Doji. There were two up thrusts in the shadow of that Gravestone Doji.
Yes, I shorted that as well, but I closed it way earlier than you, though.
Well, I didn't do one position. I break it up into like 6 or 7 positions, and I move them down and all around. And even if a third or half of them get stopped out to lock up profit, it was a good enough entry that I've been able to fade some of these little bounces. So yeah, I mean, I shorted from 69K, but I had to close it out. I mean, I'm not good enough to hold all the way down. Like I'm not that good.
I'm not that good either to hold
I'm
it all the
definitely
way.
not that good, but we're having fun out here. So anyway, all
Thank
right.
you, Chet. Appreciate
Thank
your
you.
help, man. Thank you.
I appreciate you.
Thank
There's
you, bro.
this notion that it's like, oh, if I only have shorted from or in
Right.
Bitcoin, or oh, if only I bought at, and they say if you had bought Amazon in the year 2000, you would have probably sold it in the year like 2002. So
Right.
it's like, so there's so much hindsight where it's like, oh, if only, coulda, woulda, shoulda. But you don't need to hold these big positions or any positions for weeks and months, because there's a fee on that. If you're paying the who's and what's it, and um, there's so many huge bounces in crypto. Like, you can be bearish on Ethereum, but the trade from the break of 1,000 to basically the break of 2,000, that was a hell of a trade. So to be bearish during that particular move um, it doesn't make any sense. So there's no, it's okay to have a bearish bias but still take bullish trades and positions. And that's kind of the thing as a trader. It's like, you can feel that, okay, sentiment's bad and everything's bearish, but is no problem taking advantage of an oversold opportunity.
That's Big Chon, is taking advantage of oversold opportunities every day. What's up, Zen Crypto? Zen Crypt.
Hey, Big Chats and Big Jonas. Nice to meet you again. So I read your book. You say trading is 1/3 risk management, 1/3 technical analysis, and 1/3 trading psychology.
Yes.
So can you explain a little bit more on this trading psychology side of things? I think it's not that much covered. Like, do you do meditation? Or how do you manage your own emotions and stuff? Like
Well,
that?
I use a trading journal, first of all, which helps me to stay mindful when I'm entering a trade. I write down why I'm entering, my trade idea, but I also write down like how I'm feeling. Do I feel my bored? Am I excited? You got to kind of monitor yourself. But I practice mindfulness just in generally as for a lifestyle. I've been doing that for a couple decades and get better every day. But I'm probably in my head a little bit too much, but I'm definitely aware of what I'm thinking and what I'm feeling. And so that kind of led me to kind of dive into the whole like trading experience. That's why I like write and constantly tweet about like how it feels to trade and to lose money and to make money and to be bored and to get excited and do all these things. So that's why the book is about 1/3 trading psychology. I talk about managing your emotions. I talk about just trying to be the best version of yourself, not someone else. You don't know what their lifestyle is like. Not getting too high, not getting too low. So I studied psychology as well in school. So it's just how I approach things and how I think about things. So it's kind of a natural fit for me. But then there's 1/3 TA, of course, the book. I lay out the basics of classical charting, Japanese candlestick theory, the stuff I learned in CMT, and then risk management. How to define your risk, how to actually enter your trades, exit them, all that stuff. Um, but mindfulness is really important. Like, that's the hardest battle. Is it's us against ourselves. You have to cultivate a good trader. You have to make yourself be the best version of yourself to actually succeed as a trader.
Yeah, I agree with you. So, Big Chona, do you have anything to add? How do you manage on your side?
Yeah, the biggest mistakes people make is, and what I think burns the most like mental capacity, is being too heavy in one entry of a trade. Um, People feel trapped, right? You have to give yourself outs and wiggle room. Trying to nail the perfect bottom or top is insane. And just an example, I was looking for puts in SPY this morning, and I knew that I felt I was right in trying to scale in to that, and I was early a few times, but I didn't go heavy on my first few entries, and that was what didn't freak me out and basically make me capitulate the trade. So I was able to get in the end a better position just by gently scaling in. And I think what people, use the word, "Oh, I'm trapped in a trade," or "I'm heavy in this. I don't know what to do." It's because the execution of that trade put so much mental pressure on you. So trying to avoid those circumstances is such a good mental health trick I've found, and keeps me clear and focused, because there's no worse decisions that you can make when you're, feel like you're trapped and don't know what to do, and there's a lot of money at stake.
Yeah, trading.
Okay.
That's a well put, man. That's well put, Big Jonas.
Do you have any like a exercise routine or daily routine that you follow in the morning, Chad or Connors?
100 push-ups, 100 sit-ups, black coffee, 3 eggs, mile run,
3
swim,
eggs, 2 steaks.
jacuzzi. But all this after like 1 p.m. now, right? So.
Yeah. I'm on. I definitely work out. Like I shoot a lot of jump shots. I have a basketball court here. I do intermittent fasting now. So I'm not even eating till like 1 o'clock, and I stop eating around like 6 or 7. And I try to like go to the gym a couple days. I love going for bike rides. I've been on a lot of bike rides in the summer. I'm not like super fit, but like, if I just sit around all day, there's not enough blood flowing through my body, and I'm aware of that. So I do work out. I think it's really important you work out. It's important you get good sleep as well. You got to take care of yourself. Next up, we have Einar. Einar, what would you say? And Trainwreck, please wait and let me handle the mute.
I'm sorry.
Einar, what's up, Einar? How you doing?
What's up, boys? I'm a big fan from France, so I'm speaking to you from Paris.
Oh, bonjour, mon ami.
Bonjour, mon ami. I'm glad to be able to speak to you tonight. I'm just, first of all, saying hi to all of the people that are in this discussion. And I have only one question for you, but I wanted to say that I am a big fan about what you said on emotional intelligence, because I do advocate that a lot on my trading.
Oui.
I'm originally a gold trader, so I see Bitcoin as an exotic asset, and I trade it that way. Then maybe that's the only difference for me. I do use a lot of delta profile stuff, exchange flow for Confluence before taking my trades. So just to have a different type of trading style, and it helped me a lot recently making intraday scalps, especially in London and New York session. So been making some good money in last days. My question for you is like, do you check money flow on the global market? Like if the yields go up, stocks go down, commodities like gold is taking a tank actually recently, to get the narrative right about the sentiment before taking a trade or
Never.
Okay.
That's a cardinal sin.
Okay.
But first of all, it's great to hear from you, and thank you for stepping up. I'm glad you're trading well. I think it's good to be aware of those things, just to kind of generally get a sense of what the markets are doing. But like the chart, you have to trade what's inside the 4 corners of that chart, right? Just in front of you, and on that screen in front of you is the data. That's all the data you should need to make a decision, and what the price is doing. Not even using any indicators, just simply the price relationship to support and resistance, kind of what the candle bodies are showing you in terms of momentum, where the buying power is, where the selling power is. Social media helps for sentiment. I'll definitely pay attention to sentiment. I'll start to look for opportunity, when people are giving up and stuff like that. And when people really, people tend to jump the gun when the price moves. So yes, that's out of the chart. And that kind of helps me be aware of what's going on. And yes, I'm aware if if the Dow is down 1,000 points in the day, or if interest rates are up, and if the market's doing certain things, I'll be aware of it. But I'm just gonna, whatever's in front of me is what I need to trade, just based on the data in front of me. So you have to be aware, but also be disciplined, and make a decision based on the data in front of you. But Jonas, you're more of a broad market guy. How do you approach this topic?
I approach it head on, Sheds.
Yeah, you do.
That's all I got. No, I mean, it's one of those things where if you're aware of these FA and how these rates and stuff affect market. We were talking this weekend. You said the Dixie hit 110, and we're thinking about this thing keeps ripping. The stocks can't find a really good rally because it's almost like a safe haven. The more demand there is for dollars, it's people basically like they're putting money in dollars versus having it in stocks, and that's a big sentiment shift. And the way that rates work is, we're actually starting to get a little bit more payout on saving, which is a big shift compared to basically the last 10 years, where savers have had like 0.1% interest on their money. So this could be a real tectonic shift, and we haven't seen rates at these levels for years. And this is what the Fed kind of wants, right? Slow down the economy, slow down housing, and basically slow down everything to create a situation where we kind of fight this inflationary push on the market and on, basically everything. But there's so much involved. And I think this just lastly correlates to what the caller said earlier about the correlation between like markets and like, if S&P does this, then Bitcoin's going to do this, and if the dollar does this, then that affects S&P. Like the more advanced you want to become as a trader, investor, it's important that you should be aware of all these other things that affect the market, and this can be a good hedge and advantage to you as a trader to see something coming. Oh, if this is strong, then I know this is kind of weak, and I'm going to kind of avoid it or short it.
Well, BTC is breaking down here, 18.7 range lows. All right, thank you for the question, Einar. Great to have you up.
Thank you, sir. Have a great night.
Bon chance, mon ami. Bon chance.
Merci. À vous aussi. Merci. Au revoir.
Okay, thank you. Appreciate that. I said good luck. He said you as well. Let's see. Trainwreck. What's going on, Trainwreck?
What's up? What's up?
Hey, what are you doing tonight?
Not too bad. My question is, I know you're a price action guy and you always give everyone shit about complicating things. So I'm wondering, if you think that there are like layers to your rule, right? Like exceptions to your rule. If we sweep the lows on Bitcoin and pop back up with like a real sexy deviation.
Yeah, I'm going long there all day. That's a beautiful W bottom with the lower low on the second. Yeah. Oh yeah.
Okay, so against the backdrop of Armageddon, you're fine.
None of that matters. What is that? That's all talk. If that's important, it will. What you've heard me. If that matters, the price will break support. Like, why do we spend this much time talking about
I agree. I'm just wondering where the rubber meets the road with macro news and all that and price action.
Well, it meets the rubber in the road when sellers show up and buyers flee, or vice versa. I mean, if Bitcoin breaks below 17K and then bounces and holds 20K, doesn't matter what the rest of the world could be on fire. Like if Bitcoin holds 20K, it's holding 20K. Like if any of that matters, okay, maybe now Bitcoin doesn't hold 20K anymore. Like you can just literally just look at the price, like either holding support or not. And it's just amazing. And I think we only do it because we're bored and we're waiting for something to happen. So everyone sits around and spins a tale and a story. Everyone's trying to explain price movement. Before, I remember in my earlier days, I would watch, the market, new legacy news, CNBC or whatever. And the market's down 600 points today on news of X, Y, and Z. It wasn't until later I realized they're just giving you a narrative because they think people want to know something nice and neat. It did this because of that. When in reality, it was just part of a trend. And they couldn't say, oh, it's a mean reversion. And you got rejected on, like overnight at the gap window or whatever, something technical. It's like, we need to know there's a story behind why things are happening. When in reality, it's just there's more buyers or there's more sellers. There's momentum. So it's just this need to make everything be a story when it doesn't really need to be a story. We have to move away from that. We have to reject the storytelling.
So you think, with where we're at, we've come far down so far. We've pretty much reset all the oscillators, right? That's enough for you. Price action, pop below, deviation. See how it reacts.
Let's look at it like this. All right. Daily chart, right? We broke down kind of June 10th and 11th. Yep. We lost like 28K.
Yep.
And we flushed, and we bought them June 17th or whatever, June 18th. And we had that nice rally. It was a really nice rally. It wasn't as strong as the SPY. It couldn't make it to the MA200. It had a really nice relief rally, but it was still relatively weak, right? It couldn't crack 25.5. It couldn't crack 28K, and it couldn't or even touch any of those. But it still went on long enough that it reset everything. Yeah. After breaking down again, August 15th, I mean, that's the kind of consolidation that allows you to go to like 12K.
Yeah.
That's enough to go all the way down to 12K. That is enough consolidation. If you just understand how trends work, right? A bull flag is a correction after an advance. It's a falling channel that people freak out and sell when it's just a nice reordering of things, removing short-term speculators, and then the trend continues. And then you've reset everything. You've worked all that short-term nonsense out. So that's how devastating that breakdown was. And then not holding 22.5K. Not immediately bouncing off of that was just like a huge. I mean, so you basically had to sell on August 19th, and then we did a nice rising, like a bear flag, and broke down from that, and then we just did another, bear rectangle and broke down from that. So it's moved down, consolidation, moved down. It's going to continue to move in the trend. There's no reason why this can't, go to like 17.5, try to bounce, fail, and then just flush. But it's never that neat and clean. It's probably going to go sideways for a few more months and kind of bore everyone.
Yeah, I think that's my point. Is obviously as soon as we broke that like horizontal, we were heading towards the bottom. But I'm just saying we're obviously going to run that. Whether we pop back up or not is yet to be seen. But I mean, is that what that's next? Is basically if it doesn't 12K.
No, I mean 12 to 14K is supply zone. I think you can see a lot of buy pressure come in around 14K.
Right. Yeah.
There are a lot of people like me. A lot of people like me are going to start buying there.
Okay, fair enough.
But,
thank you.
12K would be like just so I can like hit the home run as well. Jonas, what do you think?
Bud, you're just pumping fudge, heads. Just pumping fudge. We are going to the moon and beyond.
Yeah, we are.
Ask the guy who bought at 18K like in June, right? And then like ask him if he sold, right? Because that was a good trade. 18K to 25K.
A great trade.
What's that? Like 9, 10, 7,000. So right, that was a good trade, right? So now we're back here at 18.7. So ask that guy, are you in it for the long term? Or did you just like give up like a great entry and a great trade just because you have to hodl, right? Or you need to have
a trader became an investor.
Right, exactly. And you have to know what you're doing. Like you can be like bullish long term, which I guess is I'm bearish now, but long term there's no doubt that Bitcoin's going to hit 100K or $1 million. I mean that's such like an easy way out. I mean there's no right or wrong answer because talking about the future, like who's going to win the Super Bowl this year, New England Patriots obviously. But what we're talking about here is the relative perspective of where you're putting your money. Are you prepared to lock up a DCA entry now or a few grand less or a few grand less for the next, 3-4 years, which, I mean, historically speaking, it takes that long to produce, the next bull market. So like, what are you trying to do? And is Bitcoin the right thing to do? The diminishing returns are apparent. Maybe your money should be in Ethereum. Wait a minute, Ethereum is doing this crazy hard fork thing, and or splitting or merging or I don't know what the heck it is. But I know it's a big deal.
It's a purge. It's called the purge.
It's the purge. They should make a movie about that.
Well, I'm gonna make a tweet there. Hold on, I gotta go ahead.
So there, like the biggest running coin of the next bull market is probably something that hasn't even like come out yet. And if we look at the dinosaur coins that have been around crypto since when I started in 2016, some of them had big moves during the last bull run, and some of them did jack shit. So there's no way to tell if it's an older project and it's still around, therefore it may have a better chance. I mean that's what people of the Litecoin hodlers have been saying for years. So it's about what you're doing with the money you're putting into these things. And for me, I mean, Bitcoin doesn't have to be an investment. It can be just a trading vehicle. And if you trade it based on a lot of the technicals that Sheds always talks about, that's how you can, over the long term, make it very profitable. And isn't that the point?
I put up the tweet. ETH went from the merge to the purge. Thought that was pretty good. All right. Next up, we have D Bitcoin.
How's it going, Chad?
Hey, what's up, man?
I really enjoy your conversations. It's awesome.
Thanks.
And, I've been trading for about a year or so, and got into this Bitcoin and started out with Bitcoin and invested some a little bit here and there.
Yeah.
So when I guess from the charts, I'm looking at the monthly charts and trying to
what?
On Bitcoin. Sorry,
Too long. Weekly charts, the longest valid time frame.
Weekly charts.
You don't need an MA200 to have a trend. You need at least an MA200 on any chart.
MA200. Gotcha.
Right.
And when do you think that potentially we could get back up to the 40s the way it's going?
The only thing you want to look at right now is the weekly chart, and if the price can reclaim that weekly MA200. That's the price has always bounced off of it for the last 12 years. More, and I mean, it's only tested it 5 or 6 times. But that's the trend, is the rising MA200. We're now trading below it. We're in an unconfirmed uptrend in the weekly chart, threatening to kind of turn it into a downtrend. It needs to be above the 200 to just do nothing. And if it's going to go to 40K, it's going to have to cross that weekly MA200 first. Use that as your pivot. Use that as your risk on, risk off level. I feel like people who are dollar cost averaging hodled should have sold when it broke the 200 weekly. I just think if it, and maybe not right at it, but when it looked like it wasn't going to hold it. I mean, you cannot hold, like, this thing can really roll over. There's real danger of this rolling over, testing, 12 to 14K, failing, and then, going below 10K and just being there for a while. Right. So I just, if that's, I think that's like a 1 out of 8 chance, 1 out of 7, that should be in the conversation. If it's going to go up, you're not going to miss it, right? Because it has to break the MA200. Or if you want to have a simple 20K above or below, use that as your pivot. Pick some level and define your risk based on that level. You have to be in control by being the one who defines your risk. You can't let the market define the risk for you. You can't be forced to sell. You have to always be the one deciding to sell when your idea fails at a small loss so you can wait for the next opportunity.
Thank you so much. I appreciate it.
Thanks a lot.
I vehemently disagree with you, Chads, in regards.
I know, we
to
always do. That's why you're fired.
To the monthly chart, you
There's
just
no
like
MA200.
dismiss it. Well, so what?
Because that's the trend in classical charting. Is the MA200 is the trend. If there's
why,
no 200,
why
there's no
200
trend.
what? 200 what's?
200 months.
Why can't it be 220 months?
I don't make up the rules.
Oh, so it's just, but it sounds so arbitrary. 200.
It works the way it is. It's been around for 100 years. I'm not going to be the one to change it.
So is the 100, and so is the 50.
Well, you're going to use the
you're
75
just dismissing
as well.
those.
Use the 75 and the 40.
Well, if you go on a higher time frame, right, then you can use a lower moving average. So your point about once the 200 was lost on the weekly, why can't I say once the 50 was lost on the weekly? That
the 50 was a big deal back in December.
It very much was.
Yes, but it's not as big a deal as the 200.
All right, so
200 is the trend. The 200 is the trend. You only play uptrends. You only play stuff trading above their MA200 in the daily. All the altcoins, these people even listening to me saying ignore all the ones below that blue line, below the MA200, because those are downtrends.
All right, so let's look at the MA200 on the 2-week Bitcoin chart.
On the 2-week?
We're cutting the difference here, and it is clearly there.
I want 4.3 week if we're doing a full month.
Well, we're cutting in half. If you think the weekly is,
can I even do it?
Absolutely.
I have to add it? Oh my!
And there it is, and it's at 13.5 right now.
All right, hold on. I'm literally adding 2 week. This is ridiculous. All right, 2-week chart. Wow, it still looks pretty.
It's still pretty good, right? We're above the 200 in the 14-day. It's a solid
Yeah, but
trend.
the eight is crossing the 34, and
Well, actually, all right. So, in all seriousness, though, something that is happening on the monthly that has not happened to Bitcoin since
lower BB.
Nope, since 2015, and this is a big deal because these are two moving averages that I use exclusively in my trading, with the 12 and 26. And the EMA 12 and EMA 26 on the monthly chart briefly crossed bearishly in the year 2015. And you're saying, "Whoa, it must have crossed bearishly in the bear market of 2019 and 18." Well, no, sir, because it scraped. It was such a beautiful scrape, too. It barely held, but it did not cross. And that was a signal that this was an accumulation or a reaccumulation part of Bitcoin through 19 and 20. So right now, I know it's early in the month, but right now, those two EMAs are crossing for the first time. Now, clearly, you would need the monthly candle to close and confirm the actual cross, but this is what I've been expecting during this, new bear market, and I kind of have a feeling that this cross could kind of hold for a while, and the reaccumulation of it as support. Right now, they're both at about 30K. It will take many months for them to continuously fall down. But this is a big deal. And what you had spoken about, this king can really roll over. There's no doubt. And I think a lot of the, on-chainers, if you will, and the people that use the term like we could never fall below here and this and that. This bear market is very different than the previous ones. We've already violated a major tenet of Bitcoin price action. Thou shalt not violate previous all-time highs. We've done that by the 20K violation. And because of that, frankly, any scenario really could be on the table. And that's what's scary about what's happening here. And I feel the more people that feel like they're being safe by DCAing at these price levels, are going to be tested with time and potentially a lot lower prices.
That's it. I think that's a good way to look at it. What's up? We have a few more. We're going to finish them up, and we'll wrap this up. It's been a great, fun spaces. Smash Main. What's going on, buddy?
Hey, Cheds, Chaunis, thank you for having me on. What a pleasure. I've only discovered you, Cheds, recently. Really appreciate what you put out. It's awesome.
Appreciate you, buddy.
I don't know your story. I have not read your books, but I'm curious what your most profitable trades have been. Have they been longs? Have they been shorts? What time frames are they on? Have they been on alts, on the big caps? Speak to me.
I mean, it's been a lot of up and down over a long career, right? I've been trading for about 15 years and more seriously for the last 10 years. Back in 2014, I started doing pot stocks. I started doing pot and I started trading marijuana stocks because of the volatility. And that's when I started taking TA a lot more seriously, studying candlesticks. I eventually studied classical charting, Japanese candlesticks, did CMT level 1. I'm a cancer survivor. And I was diagnosed with cancer the same year I discovered Bitcoin, which is 2017. I discovered Bitcoin through Big Chonas, who's a good buddy of mine. And, focusing on that BTC run of 2017 and 2018, hitting 20K for the first time, that gave me something to focus on other than like more or less fighting for my life. So crypto, it came to me at a big point in my life. Later that year, through my social media account, which I'd built up from 2014, started to blow up as well. I started sharing more trade ideas. I started doing Bitcoin Live back in 2018. I've been doing that for 4 years. I eventually did CMT in 2020, and then I published my book, Trading Wisdom. It's been really popular. It sold almost 15,000 copies. There's a version of it you can get for free in my YouTube at Ched's Trading. I'm still with Bitcoin Live, and I just do these spaces for fun. I pretty much trade like a ton of markets. Some of my biggest trades were back in like when I didn't know any better. Back in like 2014, 2015, I had some ridiculous trades. Like I'd won, just ridiculous, like turning, stuff that people did in altcoins like the last couple cycles, like turning, like $1,000 into like $300,000, and then I lost a lot of it back, but it's so big swings back then. I did well riding Bitcoin on the way up. I've been doing really well riding it on the way down. Even though I called the top, I didn't ride it all the way down the top because I don't hold trades for that long. I like to lock up my profit. I don't ever let trades own me. So I'm kind of a grinder, right? I'm not a big home run swinger. I just like to grind trades out, grind out profit, and then walk away. I move my stop losses into profit as soon as possible so I can go do other stuff because I'm trying to still do other things. So that's kind of my style. What about you, Jonas? How do you approach this? What are some of your biggest trades? How do you kind of handle all that?
It's a good question because I think there's so many great, valuable lessons that you can get from traders that have been doing this for a while and asking them, tell me about a big trade, tell me about a big mistake, tell me about a big win or a big loss. Two things came to mind when you were talking. One was the marijuana stocks. They're saying that the market can be irrational longer than you can be solvent, right? And it comes to mind the marijuana stocks that they've had, I don't know, 3 or 4 major bull runs since the creation of them in 2012 and 2013. And what I mean by that is there were gaps in the times when it was very bullish to own them, and there were times when it was extremely bearish to own them. And we are currently in kind of a very bearish stance with basically anything like marijuana stock related. They had some nice pumps through the bull run of 20 and 21, but holders have been just utterly devastated. So there's a lesson in that where there's kind of these ebbs and flows, and Bitcoin has those historically as well. So that kind of came to mind because that's where Cheds and I remember first started trading for real, was the marijuana stock boom of 2013. The other thing that comes to mind is the first time I ever heard about Bitcoin was also in 2013. And it wasn't because I heard about Bitcoin, but there was this stock. Well, I heard about it because it was the first time it was over $1,000, and I'm pretty sure this was the first stock ever associated with Bitcoin, basically having it in its name. And I remember I bought some at the nut high in 2013, and it was kind of hilarious too because it basically went down to almost nothing, and then during the bull market of 2018 went parabolic again. So it's one of those things where I held it like 5 years. But my point in this is that through longevity of trading, you can really learn a lot. And I think Ted said something that was so poignant, which was that naivety can be your friend in trading for only so long. You can be brilliant and think you're just an excellent trader and you make all the right moves, and a lot of people during this 20 and 21 bull run thought that way, that they had just nailed it. They were young, they put some money into the market, and all of a sudden they had more money than they could have possibly thought on paper. And there's a point where their naivete towards what was really happening basically turned against them, and they lost and are still losing a lot, all if not most of what they had for a time on paper. So there's kind of fast forward to me as a trader now, and I am more cautious. I am more conservative in my trades because, as Ched said, I like to lock up profit and limit my risk downside, and that's something that you gain and achieve just through maturity and experience in trading.
All right, next up, we're gonna do a couple more. I'm gonna finish. We'll do kind of a lightning round for the last few. Everybody, thank you for listening so far on Big Cheds. That's Big Jonas. Check me out on YouTube, Cheds Trading. And anyway, all right, next up we have the Big Bull. What's going on, Big Bull?
Hello, Cheds. How are you, brother?
Good. I'm having trouble hearing you. What's your question, my friend?
So my question is, what's the difference like in buying Bitcoin from an exchange and or buying an ETF?
Buying it from an exchange and from what? Buying an ETF?
Yeah,
Like what ETF?
the one listed in Nasdaq,
Oh,
the
the
wealth creation
BitO or whatever. Okay.
Yeah,
Yeah.
BTF. Yeah.
Yeah. Thank you so much, my friend. Thank you. Big Jonas. I mean, you just have there's the BitO, BitF. You're not getting Bitcoin. It's not you're not like buying spot Bitcoin. It's just a bet that it goes going to go up or down. That's the difference, right?
Well, it's about access, right? And it's about an on ramp. So a lot of people didn't want to deal with the on ramp of crypto through Coinbase or through wallets. So they're like, oh, well, I can just buy GBTC, which is a derivative or basically of a Coinbase trust, but you're also paying a fee. And for a time, this was an amazing trade because there was some awesome arbitrage to be taken advantage of. ETFs, as a rule, have basically been the way you're supposed to diversify and stuff like that, especially if they're like S&P ETFs. Nothing wrong with that, and historically speaking, they've been very smart investments. It's still about what Bitcoin actually is, and what's different about Bitcoin ETF versus actual stock ETFs is stock ETFs pay you a dividend, right? So you get paid for owning them, no matter if the price goes up or down in the stocks. Bitcoin is not like that. So I don't really I really can't see how Bitcoin can be a true ETF. I know there can be derivatives of how you can trade or Bitcoin, but to really consider it a true ETF, I feel like it needs like a different term.
All right. Next up, we're going to do the last few really quickly. Anon, Crypto Unga. What's going on, Anon?
All right. Thank you.
Thank you, my friend. What's up, brother?
All right. My question is on a slow bleed versus a fast flush.
Oh, this is a good one. Good one.
Okay. If we slow bleed all the way to 12 to 14K with no bounce.
We'll break it.
So wouldn't that eat up?
We'll go lower. That'd be really bad.
Yeah. So my question is that wouldn't that eat up all the liquidity and even open up the door for more sideways, or even open up the door to test lower levels?
Correct.
And
correct.
Yeah, would it be if we see a better reaction from buyers or a trend reversal? Would that be a
big
better
drop? You need a flash drop. You need a big volatility candle. If you slowly bleed, it's unlikely to hold because you need to create an overreaction movement to shift momentum.
Mm-hmm.
Right.
So
otherwise, if you move slow and steady, the trend will just consolidate all the way down.
So that's one thing I noticed.
Let's finish it up. We're going to finish it up. It's getting late. What was your last point?
All right. I'm from Addis Ababa, Ethiopia, and thank you for giving me the chance. Thank you.
I want to say thank you for stepping up tonight, my friend, and I hope you do well. Thank you so much. All right, that was great. I'm sorry. I just want to wrap this up quickly. It's time for bed. Andrew, what's going on, Andrew?
Hey, Big Cheds, long-time listener, first-time caller.
Nice.
I've been following you on Bitcoin Live for about a year.
I see your name. I recognize your name. I recognize your handle.
Nice. More of a just a praise than a question. I love what you do. I love how much you put into this. You're just so accurate. I'm learning so much. I'm reading Japanese Candlesticks now. Yeah. I got your book next, and then the memoirs from Peter Brandt. Yes. Just kind of soaking it all in.
Oh, those are great books. His book's really good.
Yeah. I went a little too heavy in the bull market. Only got into the market last year, so levered up, made a fortune, lost most of it, and now just kind of clawing my way back. But I'm looking at the 2-week chart because you guys mentioned it, and it actually looks really good. The 2019 high lines up with the MA200. There's that bounce off the EMA 8. Yeah.
It is. That's the danger. It's a great, and that's the danger of if you're always using the 2-week chart, then that's valid. But it's the danger of kind of moving around to find a time frame to kind of fit your bias too. You know what I'm saying?
Yeah.
Have you watched old videos yet? Have you watched my stuff from like the October and November top?
Oh yeah. Oh yeah,
Okay.
I've gone all the way back. I've even before I was in the market, like March 2020. Like I've been looking at that and looking at the alerts, and, just trying to get a feel for what to maybe hope for and expect on that big bounce.
Good.
See what might be coming.
I love it. You're doing. I love it. You're taking control, man. Thank you so much. So glad to have you.
Thank you.
All right. Fantastic. That's what you got to do. I love when a student takes advantage of the resources. Mr. Mist Truth. What's going on? And we'll get Chromage in as well last. What's up, Mist? What's going on, Mr. Mist? Mr. Mist, this is your chance to speak. Yo.
Hi, sorry. Appreciate it. Thank you.
Sure. Thank you.
Two things really quickly. One comment, the whole TAFA thing, totally on your side, just saying. But
hey, the price is on my side. That's all I need.
Yeah, I started early November and got into you at like February.
Wow.
And basically gone up since I started listening to you and down since I tried to do FA. So anyways, that's my anecdote. But my question is I try to take what you guys say and like just like compound it, like take a little bit, use it, compound it, try to learn slowly.
Yes.
And I was listening to the Peter Brandt interview, great interview. You're a great interviewer as a side note.
Thank you very much.
The comment that he made that really resonated was the whole cutting your losses, like that stack that he said, like if I could just take all my heavy losses out and let my winners ride. So I've been trying to do that. And my question is, how do you do that? Like, or like, what's your best advice for doing that very effectively? Because I've started to implement that. I took a position in SQQQ, worked out really, really well. Got out of it and it still kept going a little bit, and like that's fine. But I'm more just like curious. Like I use the horizontals, the volume. I try to keep it simple, but just more clarity on that point, basically.
When you enter the trade, you want it to. It's a great topic. You want to look for a really well-defined level on the chart, right? If you're scratching your head and you're not sure about the trade, then it's not there. Like you want to really play the stuff that's so obvious that it jumps up and hits you. Number one. And it's all about timing and entry. So if you're looking to go long, you need to find a dip first, right? If you want to go short, you want to wait for it to bounce. Like you need a move to fade. So you want to keep that in mind. Number three, you want to enter as close to your invalidation level as possible. So you have an asymmetric or one-sided risk to reward. So if you can enter close to, the key support, it's always bounced off 100. It went to 150. Dropped to 100, went to 140, went to 100, went to 170, back to 100. So the next time it comes back to 100, you want to buy right around 103, 104, 105. So your stop loss at whatever 98, is pretty close by, right? You don't want to buy at 120 and have your stop loss be at 100. Like, so you want to enter as close as you can to your key level because you have to admit you're wrong quickly, right? Just take the loss. The trade idea failed, just take the loss. Taking a loss feels really good. A small loss, it feels really good because you're in control. You're back in control. Every move you have to feel like you're in control for every move. Every move. Jonas, how do you handle this?
There's a time when in the last bull run or a year ago where I wanted to size up in my trades, right? I was trading well, I was making really good money, and I wanted to, if my initial entry was $500 or $1,000, maybe my initial entry now can be $1,500 or $2,000. And for a time that definitely worked. But when things started to turn, I started finding myself chasing and being much more heavier into trades I really shouldn't have been in, with size that I shouldn't have been in. And I think a lot of people sized up kind of at the wrong moment. So there's a time when you can size up and there's a time where you really shouldn't. And I think understanding that is a very important point, because the result of that is you can burn yourself up really easily in this market if you've been trying to go heavy, if you've been trying to find a few like swing trades here and there. Swing trades have been really, really tough. A lot of things have been fading, and a lot of like intraday fakeouts just they don't fall through. And if I was used the same kind of leverage and size I was like a year ago during this kind of price action, I'd be getting slaughtered. So I recognize and have done that this time, which is to basically limit my size. And as Ched said earlier, like once I'm in some profit, I'm setting my stop, I'm scaling out, I'm rarely holding overnight. The gap ups and the gap downs in this market now haven't been that great, and especially with IV the way it is. So it's kind of about knowing when you can be heavy and really pound these certain trades, and knowing when to take the foot off the gas.
All right, we're going to wrap it up real quick. The last three. I just want to get you in real quick. Chromage, what's up, man?
What's up, guys? Thank you a lot for
Tiago, brother, wait your turn, brother. Tiago, wait your turn. Chromage, what's up, man?
Yeah. My question was more kind of around like ETH. You've been a very vocal person following on Twitter just about ETH and how it's kind of holding BTC up and different things.
Yeah.
And looking at the charts and, following you since, a couple of years, you've been spot on. And it seems almost like ETH is almost in the point of not flipping like BTC, but almost being a leader in this market cycle as far as drawing things down. And looking at the T almost now, it seems very easy that BTC sets a new low or drops further than the 17.5, but ETH almost at the 800 almost seems like that low might have been in based on the chart. And I was just wondering if you could expand on that.
Yeah, I mean, if you look at the BTC ETH, if you look at the ETH BTC pair, which is essentially Ethereum straight up versus Bitcoin, that's been trending up. So Ethereum's been holding up, has held up much better. It had a stronger relief rally. It led in many ways. It's a proxy for risk. It's a proxy for the altcoin market. Bitcoin's been weak. It's been flat. It hasn't had a great bounce. So Bitcoin could break 17.5. Go to maybe 16K. Ethereum still might be above like 1250 or 1300, which was that prior breakout level. So Ethereum still has a lot of meat on the bone, a lot of relative strength. The bottom could be in, but I'm still thinking Ethereum $300, $400, $500 is where I'm looking to get something. I don't know if I'll get it there, but that's just how I'm approaching the market. I think if the market has another leg down, and then you've got systemic risks for Ethereum, so it's at least a 1 in 3 that things are going to break down and not work out. Cascade with some kind of a panic type environment. So I still think that it could go lower, but it certainly has more relative strength. That's a great topic. Let's get through the last ones real quick. Tiago, what would you like to say, Tiago?
Yo, guys, what's up? Thank you a lot, Chad. I've been listening to you for a few months because of Ivan on Tech videos, and
nice.
Love your chat, love your content, your channel on YouTube.
Thank you.
Content also on Twitter.
Thank you, brother.
And actually, I would like to ask you if it's possible. What is the way you approach the levels in terms of time frames? Because each time frame, if you look at candles, if you look at weeks, they manifest themselves in a different way. So also levels will be put in different.
Yeah. So listen, you want to look at the longer the time frame is, the stronger the signal. So that's a big thing to keep in mind, right? So the lower time frame you go, maybe you catch the move earlier, but it's higher risk, right, in terms of the trend changing. Secondly, when there's volatility, then you can switch to a lower time frame. You can kind of see what the price is doing, how the price is consolidating. Is it putting in higher lows? Is it breaking resistance? Is it losing support? So after volatility, you can go lower time frame, and also when the price is at a really key level, at a very important level, is when you can go to a lower time frame. But really, generally, you should understand what the daily is doing. Trade the daily, understanding what the weekly is doing. Maybe trade the 4-hour chart, for some type of a move if there's a little bit of volatility. that type of thing. So
Yeah,
that's
I like
how
a
I'd
lot
approach it. Okay.
Yeah, I like a lot to go from macro to micro in
Mhm.
that way, and
Mhm.
I think that you can be a lot more secure in to have a position, take a position near the bottom, because for example, if you're on the monthly, you have the RSI that is already uh, a lot oversold, then you can go on the weekly, on the daily to look for the spot and a more precise spot where to make the entry position. The other thing that I want to ask you is that when you use the MACD and the RSI for divergences, you
Don't
previously said that.
don't. I recommend you don't do that.
Okay.
Focus on
Not
price. I try not to use RSI. I would stop using it. I would stop using MACD. I would just focus on the price, either holding support or not. Look at the price relationship to the Bollinger Bands. Is it overbought? Is it oversold? Look at the price in relationship to major moving averages. These are all derivatives of price. Just stop using RSI. Stop using MACD. You don't need divergence. You're trying to get too complicated.
I don't know.
Okay.
RSI divergence can work. MACD, I kind of
think
agree with
it's
you, but
but it wrecks most people. Like most new people asking me questions in this space are going to lose money trying to use RSI divergence.
I think you can have. I think you're right, because the RSI divergence can play out for a very long time. If you identify bullish or bearish divergence, I mean, Cheds, what was it, like a triple negative bearish divergence in Bitcoin
on the
at
OBV,
25K?
on the OBV, which is unbounded oscillator.
And like it was, but it took weeks, right? It took days and weeks to finally break down, even though there was the divergence there. So that's one of those things where even though you can identify it, doesn't mean it's time to take the trade.
All right, last one is up, Ebram. I do have to head in. Ebram, nice to hear from you. What's going on, man?
What's going on? Yeah, so I just dialed in and you're ending the space. So yeah, that's great. I have no clue what you guys been talking about. So pardon me.
We talking about you. We were talking about you for like the last 2 hours.
Oh, damn it. I missed it. So is this recorded? Can I listen to it again? Okay, awesome. Right. Okay, so this is the last question of the day, I think. Maybe let me ask something that's gonna spark controversy here. Do we close the CME gap at 9.7K?
Oh, over what, like ever?
Yeah, I think we're like closer to closing it than we've ever been before.
I say yes. I say yes. What about you, Jonas? Big Jonas.
Yeah, I mean, I think that's true.
All right, no controversy. You got to try. They got to try again. There's no controversy.
Yeah, maybe just to put it in time frame, do we hit it within this cycle? Is it going to be towards the bottom, or you're thinking on a much longer time frame?
I think over the next 2 cycles, because I could see the price bottoming. I could see it happening here, but I could see it also bottoming 12, 14K, bouncing, going as high as like 45, 50K, and then putting in a lower high overall, and then just eventually making its way back down to the teens, and then maybe breaking it, because I think the market structure is changing long term.
So you're the one sparking controversy here. So you're saying that we have a cycle with without a new all-time high. That's
absolutely possible. Absolutely, of course. You
got to ask yourself, why did Bitcoin run to $69,000? And it was in the biggest bull market run that we have seen basically since 1999, 2000, in terms of the money flowing into just anything, right? Anything, get me money in there. And now we have too much supply, there's too much paper out there. And there was Peter Schiff, our buddy there, tweeted earlier today. I saw it, it's on my mind that Bitcoin dominance, which Chad's used every day, is dropped to like 38%, and it's about the down. I mean, if it was just Bitcoin, right, or just like Bitcoin, Ethereum, and Litecoin, all the original 3 on Coinbase, right, and you had just one investment to make in crypto, Bitcoin could be worth a lot of money. Like it really could. But there's 20,000 other cryptos, altcoins, and there's NFTs, and then there's DeFi and blocking up your coins and that kind of a thing. So there's so much out there, so many other alternatives other than Bitcoin to put your money. And the way that Bitcoin dominance is playing out is for right now, even with the bearishness in the market, people aren't prepared to abandon those other ships and put their money into what they consider Bitcoin being a safe haven, because for right now, it is not.
All right. Abram, thanks, man. Thanks for stepping up, buddy.
Thank you.
All right. Folks, and there's a few more of you, but just running out of time. I do have to go here. I would encourage you to come to the next spaces. That should be in the next week. This will be uploaded to my YouTube channel. You may be listening to this right now as a recorded space, and it happened days ago. But thank you for listening. It's going to be in my YouTube channel in the playlist for spaces. If you have not yet, please do go to YouTube, go to Ched's Trading, hit subscribe, check out all the playlists, the free version of my book, Trading Wisdom. Check out the market updates, the masterclass webinars, and all that good stuff. I'm a founding analyst at Bitcoin Live, which is something I'm really proud of. You've heard of from some of the members tonight. I do a twice a week full market update, and I'm just one of several analysts. I've been doing it for 4 years. You can check that out if you want to get serious about TA. But thank you for listening. We have Big Jonas in the house, who's a good buddy of mine, a great trader, and he'll just say a few words here on our way out. What would you like to say, buddy?
Listen, Bitcoin is not bullish. Anybody that's been telling you it is, or the bottom is in over the past several weeks, just keep note of that. I don't know, Ched doesn't know what's going to happen next, but we use these TA and data points and history and all the other things that we use to quantify our bias in the market. There's no way around this. Bitcoin is down $50,000 since November. You can't sugarcoat that. And this thing can fall a lot farther. And the more money that's pulled out of Bitcoin will be pulled out of the crypto market. We are now once again below $1 trillion in market cap, and the achievement to get to $1 trillion was tremendous. Then somehow we were able to triple that. There's $2.5 trillion of wealth in crypto that's vanished. That's just an incredible amount of money in an incredible quick and fast amount of time. So I think people are still coming to grips and are still in denial about what's truly happening here. And right now, Max Payne is still down, and the bulls have so much to prove. And because of where Bitcoin's current price is placed against its moving averages, etc., it's going to be a hard-fought battle. And the last thing I'll say is the correlation between crypto and equities is strong. And as long as the overall equity markets continue to have downward pressure on them put on by the Fed, I don't see how Bitcoin and crypto can counter rally in that kind of environment. You can't pay your gas bill with crypto. You can't eat it at the dinner table. And I think those are the things that most people are starting to think about right now. And until that retail investor can decide to put their money to work in crypto, one of the riskiest assets out there, then I don't see how this thing turns around anytime soon. But, there are bearish times before there are bullish ones. So keep that in mind and use this time to be patient, smart, and to hone your skills.
Thank you, Big Jonas. It's always great to hear from you, your perspective. I love when we do not agree. That's what makes for the best conversations. Folks, thank you for listening.
I disagree.
All right. I'm forced to accept that. Thank you for listening. Next time, please do request to speak. We'd love to have you join the conversation. Find us on Twitter, and folks, stay safe. Have fun out there. And we'll talk to you next time. Big Ched's out. And Big Jonas out.
Peace.
Another great spaces. Thank you, folks, for listening to the replay. Just a reminder, check out my book. It's on Amazon. Trading Wisdom, 50 lessons every trader should know. You can get it for free on my YouTube channel. The playlist is Trading Wisdom. I'll have a new video for that series coming out probably next week. Anyway, and definitely check out Bitcoin Live, best-in-class educational platform for crypto. Folks, thank you so much. I appreciate you listening to the replay. I hope everyone is well, and I will talk to you soon. Big Cheds out.